Before we get to some of the segments that we hit on in the dollar impact thing, why don't you talk us through how important the strong dollar is to the market and to profits as we begin to process those numbers this week, next, and the following?
Tyler, there's no question that the dollar effect is going to affect earnings, but I do think we have to look at it as a bigger picture, having seen this through many turns when the dollar gets weaker, and then what happens to earnings. So I think you have to take it with a grain of salt. I think fundamentals are what's going to drive earnings. I think companies are going to be using this translation effect sometimes as an excuse to kitchen sink to say, hey, things are slowing, and kind of cover it up with the with foreign currency as well. So you really have to be careful. There are going to be companies that will surprise in the upside and say, look, we got hurt by the strong dollar, and investors will see through it because eventually these things kind of come back to the mean. The strong dollar starts weakening, the rest of the world starts getting appreciating currency, and we kind of go back. So that's kind of how we look at it. It definitely does affect it, but it's the fundamentals underneath. That's what you want to.
That's what you really want to focus on. I really hear you there, because the dollar does swing back and forth, and I think you're wise to point out that a lot of companies may use this as a kind of umbrella to protect them from the profit deluge that may be hitting them. So let's go to some opportunities that you see here, beginning with Delta Airlines, which turned in $1.6 billion in cash in the most recent quarter. They're doing very, very well. Put a big order for lots of new planes on the table yesterday.
Yeah, they did. They put an order for 100 new planes. And Tyler, if you look back 2 years ago, the stock is trading lower than it was 2 years ago. And 2 years ago, we were in the middle of the pandemic, and we had really no line of sight. So right now, what is Delta telling you? That we've had $1.6 billion in cash flow, that going out 4 to 6 months, our planes are full. We can't supply any more tickets. Oh, and by the way, we can raise prices, and people traveling internationally are going to pay that extra price. So I think a company like this that's trading at a PE that's below the market, that has strong fundamentals, and even if things slow down, they're going to have demand far exceeding the supply. And they're in a position where if demand starts slowing down, they don't have to increase supply, because it's hard enough for them to increase supply right now as it is.
Yeah. Let's move on to the company that I think is one of the most interesting in the investment banking or the banking area, and that is Morgan Stanley. And you like it because of the pivot that the CEO has made over time towards wealth management, asset management, which are steady sort of annuity revenue streams.
Exactly. 60% plus of their revenue now comes from this recurring revenue wealth management business. What does that mean for Morgan Stanley? It's got a 4% yield. Management's committed to buy back 15% of the shares. Just announced that just a couple of weeks ago. And also, only about 20% of their earnings are affected, quote, by international. This is a company that is using its balance sheet really well now. They're not really leveraging their balance sheet in areas that some of the other banks are going to get into trouble. So, you're trading at 10 times earnings with a recurring revenue business and a cash flow that provides a dividend that's greater than your 10-year bond. So, if you're an investor with a 3 to 5 year outlook, why would you want to own a 5-year bond that's paying 2.5% when you can own a Morgan Stanley that is saying to you we're committed to the dividend and buying back shares?